Question 4. It said Nate is a trader. Her financial year ends on 31st of March. Nate prepared the following trial balances. Trial balance which contains error. So we have fixtures and equipment at cost, provision for depreciation, and the rest. These are all the items in the trial balance. Good. But since there is an error, it means we need to have a corrected trial balance. That is what it means. So how do we correct this trial balance? First, the laws that guide trial balance is this. All assets must be on the debit side. All liabilities must be on the credit side. Revenue is on the credit side. Purchases, which is the opposite of revenue, is on the debit side. Purchases returns will be on the credit side. Purchases will be on the debit side. Drawings will be on the debit side, which capital will be on the credit side. What else do we have there? All liabilities, I said it earlier on, right? Yeah. So provision for doubtful provision, whatever provision we have, provision for depreciation, provision for doubtful debt, they are all credit balance. Provision for depreciation or provision for doubtful debt should not be seen as expenses when it comes to trial balance.
That's depreciation. Right?
No, I'm just saying any provision for depreciation, provision for doubtful debts, they are not to be seen as expenses when you are preparing a trial balance.
Like depreciation alone, not provision. There's no depreciation in
depreciation is depreciation. No, there's nothing like depreciation.
Yeah, there's no.
If you have depreciation, it's an expenses. Provision for and it is always provision for depreciation.
There's no depreciation.
No.
Oh, it's okay.
Yeah, provision for depreciation. Do you get it? So provision for depreciation, provision for doubtful debt are always on the credit side. Not because they are income nor expense. Provision for both provisions are not income nor expenses, but they reduce the value of assets. That is why they always have a credit entry or balance in the trial balance. Clear?
Yes.
So whenever you see provision, it is always on the credit side of your trial balance. Clear?
Yes.
Then what else do we have? And that's all. So now how do we prepare this? We have fixtures and equipment. Of course, that will be on the debit side, which is 300,000.
Yes.
Provision for depreciation of fixtures and equipment will be on the credit side, which is 120,000.
Yes.
Inventory. There's an additional information about inventory. They said the value of inventory on 31 March 2021 was included in the trial balance on 1 April 2020. The inventory was valued as 8,800. So that is the real value for inventory. So do you get the point here? So, yes. So our opening inventory is 8,800, which should be on the debit side. Then we have trade receivables. Trade receivables will be on the debit side.
Yes.
Provision for doubtful debt will be on the credit side for 322. Yes. Petty cash, that's cash. It's an asset, non-current asset. It will be on the debit side of your cash of your trial balance. Bank overdraft is a current liability, short-term current liability. So it will be on the credit side of the trial balance. Trade payables, it's also a current liability. It will be on the credit side of the trial balance. Capital, it will be on the credit side of your trial balance. Sales will be on the credit side of your trial balance. Purchases will stay on the debit side. Rents and rates and expenses, it will be on the debit side. Office expenses and expenses, it will be on the debit side. General expenses will be on the debit side. Now, we have to check. Why do we have a suspense account here? We have a suspense account here because there are errors in the trial balance, which we have to correct.
Yes.
So you add it together. Now we have 300,000 plus 8,800 plus 16,100 plus 100 plus 41,520 plus 16,000 plus 9,000 plus 8,150 plus 2,750. It gives us 402,420.
Yes.
So now you calculate the credit side.
The 275, 70, 2,750.
Yes. So for the 2,007, here they said on 30 March 2021, a motor vehicle was sold at book value of 2,750. The disposal was correctly recorded, but no entry was made in the account of the purchaser. So you did not make account for that. So it means there's a single entry, and it has to be a principle of double entry.
Yes.
So that means you did not debit the purchases account.
That's original entry. Error of original entry.
No. Single entry this is a single entry.
Yes.
They said the purchaser was expected, okay. The disposal was correctly recorded, but no entry was made in the account of the purchaser. No account was made in the account of the purchaser. Okay. So that means you did not debit the purchaser's account.
What error is that? Is it principal? Original entry, right?
Single entry. That means this is an error that affects the trial balance. And one of the errors that affect the trial balance is when you make a single entry. Every account should have duality, double entry. But here you did not. You debited disposal account. You credited disposal account, but you did not debit the purchaser's account.
Yes.
Did you get it? So that is why there's an error. It's part of the error you have in the trial balance.
Yes.
So this will be called other receivables.
So why didn't we add trade receivable?
To trade receivables.
We added to.
We can't. Trade receivable is your credit customers. It's not the same as other receivables. Other receivables could be accrued from your customers.
Yes.
Or prepaid to your suppliers. These are other receivables. It's not the same as trade receivables. Trade receivables from your credit customers. Is it clear?
Yes.
So it's other receivables and it's going to be on the debit side of your trial balance. So when you add it together, you have 402,420. And on the credit side, calculate it, you're going to have, you have 120,000.
Yes,
120,000 plus 322.
Plus 3.
122
Yeah.
plus 11,400.
400. Plus
3,200.
Yes.
Plus 160,000.
160.
Yeah.
120. Yes.
Plus 107,498.
498.
Yes.
Yeah. 402 and
420,000.
411. Yeah.
So the trial balance balances.
Yes.
So we'll go to question B. I'm going to just do that together now. Let's do that
Together.
Yeah. They said Nate later discovered the following errors. So these are the errors that are later discovered.
Yeah, John.
So the first one, the first error, they said the total of the general expenses column of the petty cash book, $32 for May 2020, had been posted to the office expense account.
So you have to credit the office expense.
So you have to credit the office expense account and debit general expenses account. That's the first one.
General, yeah.
Yeah, general expense account. The second one, they said a payment received $75 from Anya, a credit customer, has been credited to the sales account. So you have to debit the sales account and credit Anya's account. Clear?
Yeah.
Is it clear, please?
Yes.
The third point, they said a credit purchase of $120 from Samuel has been omitted from the books of account. It has been omitted.
Omitted.
Yeah, they said a credit purchase of $120 from Samuel has been omitted from the books of account. That's error of omission. So what do we do about this? You debit purchases account and you credit Samuel's account. A credit purchase.
Yes, a credit
of 120 from Samuel.
Yeah, from Samuel.
Yeah, so you purchase it, right?
Yes.
You debit purchases account, you credit Samuel's account.
Yeah.
Samuel is the giver. Did you get it?
Yeah, he's
okay.
The supplier. Yeah.
Then the fourth one. A check payment of $19 for office expenses has been recorded as $91. This is what?
Yeah, that's the original. No, error of. Wait. The original entry is called
error of commission.
Commission.
No, 19 for 91.
Yeah, that's original.
A check payment.
Original entry, which is the amount.
No, if it is error of original entry, it does not affect the trial balance. This is an arithmetic error. This will affect the trial balance. It's an arithmetic error. 19 for 91 is an arithmetical error to affect the trial balance.
Okay.
So what do you do? That's 19 and 91.
The difference and then debit.
No, what's the difference? That's 91 minus 19, 72. Yeah, it's 72, please. Check.
Yes.
91 minus 19 is 72.
91
minus 19, 72. All right. So you debit the bank account for 72
and credit the office expenses.
Office expenses account for 72. Is that clear?
Yes.
Then the fifth error, an invoice of office. An invoice of office cleaning 235 has been debited to the fixtures and equipment account.
What?
So instead of office cleaning, which is an office expenses account.
So we have to credit the fixtures and equipment.
You debit the office cleaning account
and
and you credit fixtures and
with
equipment
the same
account.
amount.
Yeah, with the same amount. Is it clear?
Yes.
So question, that's B.
C, no.
Now C.
Oh no, it's the effects.
Yeah, they said complete the table by picking a tick to indicate the effect of correcting error 2 to 5.
Mhm.
So the first one is done. So the second one, they said
Error.
the effect of correcting error 2 to 5. So let's check 2.
Payment received 70.
Yeah, for the error 2.
Yeah.
Let's just go back to it to say a payment received from 75 from Aya, a credit customer has been credited to the sales account. So what will it affect? Let's see. It will definitely decrease your capital.
Decrease the capital.
Yes. Error on sales will decrease capital. Do you get that?
Any error if it's overstated, if it's less.
Yeah, because it's going to affect your profit. Then it will affect your capital.
Yeah, it will decrease or increase.
It will decrease the capital, yes.
Okay, so 2 is decreasing.
Yeah. The third one.
The credit purchase 120 from Samir had been omitted from the books of account.
So has been omitted from the books of account.
Yes.
It will decrease capital.
It also decrease the capital.
Yes. The third, the fourth one now, right?
A check payment, $19. Yeah, the one, the
$19. Yeah. A check payment. They said a check payment of $19 for office expenses has been recorded as 91. It will increase your capital.
Yes, increase
Great.
the capital.
And the last one, an invoice of office cleaning, 235, and is debited to the fixtures account. It will not have any effect.
Yeah, effect for the both.
Is it clear?
Yes. That's it.
Yeah, sure. Are you, yeah, will you not have effect?
That's for 4.
Are you sure? Wait, they said an invoice of office cleaning, 235, has been debited to the fixtures and equipment account. It will affect your credit, it will affect your capital. It will increase your assets.
Oh yeah, it will increase.
If it increases assets,
the capital.
it will increase capital.
Yes, because it fixes an equipment.
Yeah, is it clear?
Yes.
So that's all about trial balance and its errors.